So first of all, let's talk about size and scope of this. How much selling is taking place?
So I think it's interesting that, I think people, when talk about retail, you talk about mutual funds and ETFs. And the interesting thing is that those inflows have been very strong, to the tune of hundreds of billions of dollars for the past 2 quarters, and even in the last quarter of last year. However, I think an important segment which is usually missing from most analysis is the activity of what we call direct retail. So these are investors who are not investing through mutual funds or ETFs, but directly investing in stock market. And obviously the scope and magnitude of that, their activity has increased quite significantly, as we know from the activity in sort of the meme stocks that that have been that have been in the headlines. So the flip side is that there is sort of a baton being passed. The investors who invest in 401ks and sort of the more traditional investors who invest through mutual funds, they have been buying at the tune of several $100 billion. But on the flip side, now it is this direct retail, these meme investors, they have actually been paring down some of their exposures.
Which might be surprising to people. So basically you're saying after buying at the beginning of the rally last year in the second and third quarter of 2020, retail investors directly buying and selling stocks, they began selling in the fourth quarter. They kept selling in the first quarter. So do you expect that activity to pick up again? We were just speaking last hour with an analyst who thinks that retail buying is a huge source of staying power for the rally, and that even if it dries up, you're going to see buybacks from companies kind of step in and fill that void.
No, again, but I would imagine that the other analyst was probably talking about mutual funds, and that is continuing. However, so historically, if you look at that the activity of the mutual fund buyers tends to be actually sort of a contraindicator. They always buy late. On the other hand, historically at least, these direct investors have bought at the bottom, so they always buy when the market is selling off. The mutual fund guys, they sell when the market goes down. And historically, they have taken profit as the market sort of rallies. However, what was unusual last year, even through the third and the fourth quarter to some extent, was that even as the market was rallying, these guys kept buying. However, now they have passed the baton to the more usual mutual fund investors. But again, the cautionary thing here is that the mutual fund activity tends to be a contraindicator. They usually buy too late.
Shepard Smith here. Thanks for watching CNBC on YouTube.